Good afternoon, everyone, and welcome to the Market Wrap for Thursday, the 15th of January. And today was another win for the Aussie market. So by the end of the session, we're up by around 0.5%. Now, we were up almost twice as much earlier on, but still ending the day around a 2.5-month high. We've had 4 straight days of improvements, and that means we haven't seen a lot yet this week. And we're about halfway through January now. The market is up 1.6% so far this month. So we have half a month to go to see how we wrap up the month of January, the first month of 2026. Now, across the different sectors, we saw about half of the 11 actually improving today. The materials sector has very much been the driving force in our market recently. It hit fresh record highs for the past 3 days in a row. Today, you can see it was up another 1%. Now, the sector is up around 8% so far this year, outperforming the other sectors by a mile. The next best is energy. It's only up around the 3% mark, just to show that contrast. So materials, the clear outperformer so far this year. We've of course got those geopolitical tensions continuing to escalate, particularly in Iran at the moment. So precious metals prices, including gold and silver, have continued to soar to new heights. That saw the Aussie gold subsector actually hit a fresh record high this morning. It has since actually come back down, so we did end the day lower as gold prices retreated during today's session. But looking across the other sectors, we saw energy and financials both gaining 0.5% each. Healthcare was up 0.6%, and unsurprisingly, tech stocks actually performed worst. As you can see there, tech down 2.2%, tracking the declines of US tech giants that we saw overnight. Now, looking at some winners, we saw a number of target price lifts driving share prices higher today, including ANZ, which was up around 2.6%. That outperformed the other major banks. Also, South32 actually finished in first place on the ASX 200 index today, lifting by 4.5% to its highest level since April 2023. And BHP climbed to a 52-week high. It's been up 3 days in a row now, and we have seen that gap between CBA and BHP actually beginning to close in terms of market cap. Of course, CBA overtook BHP as the most valuable Aussie company back in July 2024, as we saw iron ore miners as a group being weighed down by falling iron ore prices. Of course, that leads back to China. Last year, CBA's share price soared to record high after record high. It got as high as 192 per share in June 2025, but it did run out of steam in the back end of last year, while BHP was slowly catching up. So although we're early into this year, that trend has continued. In year-to-date terms, CBA is down around the 4% mark, while BHP is up around 8%. So CBA's market value has been coming down, while BHP's value is increasing. There's roughly a $6 billion gap between the two. That sounds like a lot, but to put that into context, around mid last year, that gap was over $100 billion. So it'll be interesting to see if BHP reclaims its position as the most valuable company on the Aussie market, and that'll be something to keep an eye on this year. Now, looking at some of today's losers, Zip actually ended as the worst performer. It was down just over 6%, extending its weekly loss to 13.5% amid Trump's proposal to cap credit card interest rates at 10%. Tech stocks also added some weight. Life360 down around 5%, while Xero fell around 4%. And Aussie Broadband lost ground after a broker cut its target price by 9.5%. Now, the Aussie dollar has picked up a little bit of ground. It's basically flat, but up just very slightly to 66.8 US cents, firmer against all of the other currencies as well. Now, US reporting season will continue tonight. We'll hear from Goldman Sachs, Morgan Stanley, BlackRock and Taiwan Semiconductor. And we'll also get weekly numbers on jobless claims over in the US as well being released tonight. On that note, I'll see you again tomorrow.